Howdy there, folks. Welcome into today's video. Got a lot to go through in this one here today. Karp, Palantir CEO, sold a bunch of Palantir stock. We're going to speak about that and talk about if that's a huge deal or not. The Fubo CEO was tweeting a bunch of stuff last night. He was responding to this whole new potential Disney, Warner Brothers situation here. So I want to go through that in this video, kind of tell you my opinions and perspectives on that. Then I have 3 videos I want to react to. This little short 2-minute one here. The bull market has just started. That's a big statement to make. So looking forward to getting to that one. We're going to talk a little bit of PayPal, and there was something, I listened to the PayPal call for the 3rd time, and noticed something very interesting that happened within the first 2 minutes of Alex Chriss speaking that I want to share with you guys that I thought matters significantly. And the last video up here is this one in regards to ELF. The ELF CEO went on Kramer yesterday, spoke about the stock, spoke about everything going on there, so I thought that would be a good one to react to here today, okay? If you're looking to join my Patreon, I got big moves coming in there tomorrow, so you get to see the moves I'm making in there, plus be part of that Discord chat. That will be pinned comment down there. Once again, those big moves are coming in the morning tomorrow. I guess this tier is sold out. Okay. Alrighty, guys. So, oh, by the way, smash a like. Make sure to subscribe to the channel. We just hit an all-time high subscribers in the history of the channel. Appreciate each and every one of you for being here, okay? So, Karp, this is in the private stock group. People were sharing this around. Karp taking a well-deserved payday for his hard work. He sold about, let's call it a little under 1 million shares. So it looks like about $21 million worth of the stock, right? And I responded to this. I said, oh, the bears are going to have a field day with this, right? The bears are going to have a field day with this. No doubt about it, right? Oh, Alex Karp sold over $20 million worth of stock. You know they're going to have field day over that, okay? What's my opinion in all seriousness in regards to this? Okay, do I think this is a really bad omen for the stock, given that the CEO of the company sells over $20 million worth of stock? Okay, well, first off, where's Alex Karp's net worth? His net worth is pretty much all in Palantir stock, right? So one is, if you want to diversify your funds around a little bit, you pretty much have to sell the stock, right? At least portions of it over time. 2, was this some sort of epic, huge number for him overall? And the answer to that is no, because if we look at how many shares he sold, 975,000 shares, right? Out of how many shares he owns, yeah, that's like nothing. That's like nothing out of his, overall share count that he personally owns. So that's another factor to consider. Another factor to consider is are you doomed if a CEO sells stocks? Well, let me tell you this, okay? Over the past decade, I've watched Zuckerberg sell billions of dollars of Meta stock. Over the last decade, I've seen Jeff Bezos sell billions of dollars of Amazon stock. Over the last decade, I've seen Elon Musk sell billions of dollars of Tesla stock. And look at the stock prices over the last 10 years and tell me, at the end of the day, every single time pretty much those guys sold their stock, they pretty much ended up, the stock was a lot higher another year later, or a few years later, something like that, okay? So that's a little other food for thought in regards to that. Alex Karp could sell some shares here. He could sell some shares next year, the year after, the year after, the year after, right? And it doesn't mean the stock's not going to 40 or 60 or 80 or $100. So that's just another kind of food for thought in regards to that situation, right? So that's the moral of that story, okay? Now let's talk Fubo here. So Fubo released an actual statement, like a company statement, and I'm sure a lot of you guys have seen that, but I actually want to look at what David Gandler was tweeting late last night. I think they still call it tweeting, right? Even though it's called X now. So he was tweeting a few things, okay? So this person was saying, basically, it was an old Elon Musk quote. If I had $1 for every time the media reported that one of my companies was going to die, I would never need to raise money. And David Gandler said, if I had a dime for every time someone told me we were finished, we'd be in the Magnificent 8. So he said that, right? Then this person says, this just in, 3 cable competitors have imaginary plan for a service platform that doesn't exist yet and likely violates antitrust monopoly laws anyways. David Gandler responded that the streaming landscape has morphed into a labyrinth, a Venn diagram, courtesy of bundled offers and plus services, leading consumers to inadvertently pay for the same content multiple times. I suspect the Justice Department, FTC, may want to step in to protect consumers. Like I said, this will get legal. The government will likely get involved in this situation, okay? I'm going to tell you, David Gandler is not the only one. I bet you over there at Google, they're taking a peek at this, right? And I bet you any money the cable companies and the satellite companies are also taking a peek at this and saying, hey, we don't like the looks of this, okay? So once again, we don't even know if this service is ever going to even get off the ground. Never mind, even if it does get off the ground, if it's going to be a success, okay? Right here, Shaheen says, first it was Facebook back in 2015, next it was Google with YouTube TV, then Apple with Live Sports, after that Amazon Prime, basically the death of Fubo, right? And David Gandler responds, not bad, there are others such as Hulu plus Live TV and PlayStation View, right? And, to be fair, I got to be honest about this. Fubo's death has been greatly exaggerated many times. There always is something with that particular stock. Oh my gosh, this is going to end them. This is going to end them. This is going to end them. It's always something. And so at the end of the day, look at Fubo's numbers over the years. They've just continued to improve, and they're bringing down the losses massively. Their revenue skyrocketing. Their subscriber numbers skyrocketing. And so, people constantly think like it's the end for Fubo, it's the end of the Fubo, and it never is. Like they just keep getting bigger and bigger and more successful, right? Then there was this one. So the big boys intend to take Fubo TV out of commission. What's the plan? David Gandler says this is not the first time and certainly not the last. I don't believe this is anything new, he says there. Okay, so he definitely sounds very confident in regards to that. And once again, that new service, we don't know if it will ever even take off in terms of actually get started, because I think there's going to be a lot of, the government might be asking a lot of questions and poking around there. So it might never get off the ground. If it does get off the ground, then there's a big question of, can they execute, given that sounds like a mess. 3 different companies, all trying to get different rev shares, all bidding on sports actively. Sounds like a disaster, okay? Sounds like 3 desperate companies looking to just do a bunch of stuff because Nelson Peltz is after them. Next one up here, the bull market has just started. Ooh, okay.
From 5,000 on the S&P 500. Our next guest says the rally still has legs and will broaden out from here. Joining us now with where he's buying is Steve Auth, Chief Investment Officer of Equities at Federated Hermes. Steve, welcome back. Good to have you with us. You have a price target on the S&P 500 of 5,200. That's about 200 points from here. Not a lot of gain for the rest of the year. Are you tempted to up it based on what's happened so far in 2024?
Yeah, tempted to, Tyler. We set that target, way back in the third quarter last year, and did get a lot of it early on, even in the fourth quarter of this year. So I've been getting a lot of questions about that. And what I've been telling our investor base is, I think a little bit longer term here. Certainly the market's a little overheated short term.
What in the flipping flapjack is going on? I'm looking, I said these clouds are kind of rolling in here. It says there's going to be flurries today. Starting at 1 o'clock, it's 12:58. I better get this video done before these snow flurries start here in Vegas. What in the world is going on? 80% chance?
And yeah, I don't know. We could end higher than 5,200. I kind of like to look out 3 years. There's a lot of talk about the big run we've had. We only just 3 weeks ago crossed over the old high of the S&P. So from our perspective, the bull market has just started. We've got earnings. We think come through an environment here where the economy is decelerating a little bit, but it's in a kind of not too hot, not too cold environment for the Fed. The Fed is pivoting. Earnings just started to resume growth after a 1-year earnings recession. We've got, earnings going up to 300 a share on the S&P by 2026. 2025, we're at 275. That may sound like a lot, but the nominal GDP of the U.S., which is what S&P 500 companies eat, is going to be up about 40% off 2019 by 2025. So I think the earnings numbers that we're using are pretty conservative. So you've got a pretty good setup for stocks. You got earnings resuming growth, the Fed pivoting to lower rates. We're not where the market is. We've got like 3 cuts this year, but still cuts ahead of us. And it's only the leading stocks that have broken the market through the old highs. So we're thinking it's a time for the market to broaden out. And in our way of thinking, Tyler, to get back to sort of your original question, there's lots of stocks that can go up more than 5%, which is what we've got left against our 5,200 for this year. And the overall market still just sort of crawl along, which is kind of how we see it. So we're looking for laggards. We're tilted towards value names in particular. We like the regional banks here. They've gotten another whack on the head over this very idiosyncratic situation.
All right, do I think that's realistic, 5,200? I think it's a possibility. I really do. And the reason being is I look at several stocks out there and I say, oh, there's a lot of stocks that still have a ways to climb, right? Google looks pretty attractive right now. I wouldn't be surprised if that one rolls into the end of the year, right? Which is still like 10 months left in this year. Meta still has a ways to run. NVIDIA, if they come through, knock it out of the ballpark again, they're going to have a lot more to run. That baby's going to run to 1,000 if that's the situation, right? These are very big weights in the market. Microsoft's growth looks very good. And so you go stock by stock by stock. And I will say there's room for upside still in the market overall. Now, with that being said, I think there's a lot more potential strength that could be in small caps for the remainder of the year, assuming we stay bullish, in this year overall. I think that's where the real upside potential is. Those ones have kind of lagged here at the beginning of the year, the first couple months, but I think those ones have, quite a bit of upside. And remember, Tom Lee's still calling for 50%. Russell this year, right? 50%. We'll see. Next one up here, PayPal CEO, and then we'll get into Elf on a Shelf.
After the close, despite beating the street's expectations on the top and the bottom lines, guidance and account growth disappointing investors in weighing on the stock. That call's going on right now. Kate Rooney's got the details. Kate.
Hey, Mel. Yeah, it's all about earnings guidance for PayPal. It's been weighing on shares after hours. PayPal did not give a forecast when it comes to revenue or for payment volume. That omission is raising some alarm bells for analysts, at least that I'm talking to. Plus, PayPal is seeing a slowdown in accounts amid more competition out there. PayPal had 426 million active accounts at the end of last year. That's about 1 million short of expectations. It was down 2% year over year. They did start to disclose monthly active users, but there is no comp for that. PayPal also looking for full year EPS on the earnings side. $5.10. That was 38 cents below expectations for the street. Q1 EPS growth also missed. Payment volume, operating margins, and take rate did beat for the quarter, but branded checkout was also light. I talked to CEO Alex Chriss about that forecast. He said, we're being conservative in the guidance. He said, we want to see points on the board, as he put it, and want to actually execute before we start putting anything into our forward guidance there. He just said on the earnings call that's going on right now, he said PayPal needs to, quote, build back a track record of delivering on our commitments, really trying to underline that change happening, and he calls it a transition year for PayPal, although he was also just asked about when that's going to start showing up in guidance. He wouldn't give an answer on that, Mel.
Yeah, I mean, obviously I love the conservative-ness in kind of, thinking about guidance, those sorts of things, but I think something big, there's two things big here, okay? One is monthly active users. I love that they're going to start showing that number, because it's one thing if you just got a bunch of users. I mean, PayPal could put up a number of 500 million, right? And get a bunch of people to download it. But if they're not using it month in and month out, then what's the purpose, right? You really want to see how many people are actually using it actively. No different than Meta. Meta puts out a daily active user number each quarter and a monthly active user quarter, right? Those are phenomenal metrics, so you as an investor can kind of gauge, if people are actually using it, not just they have it on their phone, they have it downloaded or something like that, right? Now, there's something big that happened on the conference call that I haven't seen one person talk about or speak about. And it happened in the first 2 minutes of Alex Chriss speaking yesterday, okay? He described PayPal's results as, quote, solid results. Solid. He mentioned it 3 times in the first 2 minutes. Now, with him speaking, they had 15% total payment volume growth, 9% revenue growth, like 60% EPS growth, 39%, I believe it was operating income growth. To me, those numbers are better than solid. But maybe Alex Chriss just has a lot bigger ambitions and goals for PayPal over time than 9% and 39%. So that's all I'm going to say in regards to that, okay? And for that reason, I'm actually very, very excited for PayPal. The fact that, a man like that, the new CEO, thinks those results are just solid, not good, not great, not amazing, not stellar. I like that. I like that a lot. Let's go ahead, hop into Elf on a Shelf and see what their CEO has to say here. I actually personally haven't seen this either, so I'm looking forward to this.
Over the past 3 odd months, it got slammed today. It's down nearly 5% in response to last night's earnings report. Even though the company delivered an impressive set of numbers, Elf gave you a substantial sales and earnings beat. Management raised.
I told you guys that's just a fake out there. That baby's on the way to 200.
Full-year forecast across the board, highlighting several areas where they gained market share. Initially, the stock jumped, I think, correctly, 7% in pre-market trading, but eventually gave that up. So what happened here? Let's check in with Tim Ryan. He is the chairman and CEO of Elf Beauty. Find out more about the quarter, what comes next. Mr. Mean, welcome back to Mad Money.
Well, thank you for having me.
Well, if I get to vote on commercials, I don't have to see the others. Obviously, I just saw the funniest one. We were laughing about it. What makes you think that this one, what do you want this one to do? What do you want it to tell America?
Well, what we wanted to do, well, first of all, we want to continue to broaden our awareness. And that was the reason why last year we partnered with Jennifer Coolidge, dramatizing the stickiness of our Power Grip Primer, the #1 item in color cosmetics. So this time around, we decided to do the national buy. We're partnering with Judge Judy, as you just saw, and this cast of Suits. And this time we're dramatizing you don't have to overpay for makeup, that you can have our Halo Glow liquid filter and have the best of beauty at a fraction of the price.
Now, I'm glad that you mentioned that, because I've decided that when I look at my wife's cabinet, there are $30 bottles and there are $6 bottles, and they seem very much the same to me, and now they seem very much the same to my wife. You have figured it out, sir. You recognize that people are paying too much for cosmetics, and you are really upending the entire paradigm. It's resonating in Target.
So in terms of this big Super Bowl commercial they have coming up here, listen. They spent a fortune on this thing, okay? It's not just about, obviously, the fee you pay to have a Super Bowl commercial in prime time, right? But it's also about, the filming of it, the getting the, people to do the commercial, big name people like that, right? And so at the end of the day, let's say they spend $50 million total budget on the Super Bowl commercial, right? $50 million, which is not a small amount of money. But if that's going to help you get massive awareness from, tens of millions of people, let's just say, I'm talking about specific target audience customers, because it's way more than tens of millions that watch Super Bowl, but let's just say, like women that would actually be interested in Elf's products and things like that. I mean, it's almost like a priceless opportunity, because the thing is, when you're a company like Elf, you don't just sell to a customer one time. You sell to that customer for the next 10, 20, 30, 40, 50 years. When you have somebody loyal to your brand in cosmetics, you're set. It's almost like a recurring subscription service, no different than you would pay for Apple Music or Spotify or, something like that, right? It's just like once you sign up for it, like you're there, right? AWS for companies. It's like once you're there, you're there. And there's no reason to really switch unless there's something that's so much better out there. But Elf's shown that they just have the price points and the quality that is just pretty much unmatched in the market. And then you add on the marketing component on top of that, and it's just brilliant.
Walmart and CVS, tell us about the amount of shelf space that you've taken. It is monumental.
Well, I think what we're being rewarded by is being the most productive brand in color cosmetics on a dollar per foot basis. We're the #1 brand at Target, our longest standing national retail customer, and we're looking to replicate that strategy with other retailers. I'm very happy to announce that we're picking up space at CVS, at Walmart this summer, with Shoppers Drug Mart in Canada, with Boots in the UK, and it really is a reflection of the tremendous growth we're driving.
I do want you to tell people,
there's no question to me, Elf is on the way to becoming the biggest cosmetics company in the world. No question to me. And that's very different than how I thought about Elf, let's say, when I first started investing in the stock many years ago. Many years ago, I thought, okay, this is a company that can grow, become a very successful cosmetics company, and become one of the bigger companies. Now in 2024, I'm becoming more and more confident that Elf's going to become the biggest cosmetics company. They'll have the most shelf space. And I think that will probably play out within the next 3 to 5 years. You already go into a Target and you're pretty much going to notice Elf's the biggest player in that store. I think you're going to go into a Walmart in the future, or a Walgreens, or a CVS, or even an Ulta, and you're going to see who's got the most shelf space. It's going to be Elf. And I think that's happening within the next 3 to 5 years. So not 20 years from now. I'm talking in the next 3 to 5 years, you're going to go into a store and see that.
But anyway, just in terms of where your stock has come since you first came on, stock was in the low teens. I mean, that's an 1,800% return in 4 years. I mean, that's rather remarkable. You have been the best performer of almost every stock I follow.
Well, thank you. I really appreciate that, and I'm appreciative of the team. But I'd say there's three things that are driving that. First is our exceptional, consistent category-leading growth. We just finished our 20th consecutive quarter of growth, averaging at least 20% growth over that entire time. Second is the tremendous white space people continue to see in us. We're highly confident we can again double our share in color cosmetics. Skincare and international are even bigger opportunities. But probably the most important thing that I'd point to is our high performance team. We're unique in the consumer space, not only the diversity of our team, but that we give every single employee equity in the company every year. So we have a passionate team of owners who are united in our mission to make the best of beauty accessible to every eye, lip, face, and skin concern.
Sir, you must have many millionaires who work for you.
We do have actually quite a few people who've created real wealth, and we want them to create wealth because they're driving exceptional returns.
Now, what?
Yeah, and the sad part for me is I had nearly 10,000 shares at one point of Elf. Oh, man. Oh, man. I wish I still had every share of Elf I used to have.
Talk about what's happened.
At least I still got 1,000, and I got some more in another account, but it's just like, it's not nearly what I used to have in the stock back in the day. Oh, my God.
Your customer. I think your customer may initially have been
Regret.
You serve an underserved group, a demographic, but has it not changed to the point where there are a lot of people who you regard as being, say, middle to upper income who just say, you know what, this stuff is great. I'm not going to overpay anymore for this kind of thing.
Well, we're already seeing that with Gen Z. We're not only the number one brand amongst Gen Z with the 29% mind share, but that goes across every income segment. Our strategy has been pulling more people into the franchise. So we've been picking up millennials, Gen X, and this last quarter, we partnered with Manuel Turizo, a rising Latinx star, creating our Eyes, Hips, Face song in Spanish. And we're overdeveloped amongst Hispanics, and we continue to bring more consumers into the franchise, which is also one of the reasons why we're doing the Super Bowl ad.
Now, we have seen...
But the shocking thing is, for me, in regards to this situation, okay, he talks a lot about millennials and Gen Z and how many of those customers they won 100%. Yeah, they've done phenomenal, right? But I was speaking to my mom a few months ago, and my mom, who's always been very loyal to Estee Lauder, always was one of those. I remember as a kid, we'd go to the Macy's counter, cosmetics counter to get Estee Lauder products, right? Very, very expensive products. And even my mom was telling me how much she loves Elf's products, and now that's what she buys nowadays, and she feels like it's just as good. And that to me was shocking, that a woman in her 60s now can say, I like Elf's products over Estee Lauder, even though she was loyal to that brand for so long, right? That's a baby boomer. It's one thing to attract Gen Z and millennials, but geez, if you're going to attract baby boomers, to even say that's huge. That means you're definitely winning out there. I can tell you that much. I mean, my gosh, that's wild to me.
That resonate in the United States, therefore resonate overseas, whether it be in South America, South Korea, Europe. What are your international plans? I know they are happening right now.
No, they very much are. As I mentioned, our international business was up 119% last quarter. And most of that growth were the first two countries we entered, Canada and the UK. Last quarter, we entered Italy with Douglas in Italy and quickly became their number one brand, not only in the mass side, but also across prestige. And we found two things. One, our value proposition resonates all over the world. And second, given our strength in social media, the Italian consumer already knew about Elf long before we got there. So we have big plans to continue to expand our brand to the world's consumers.
How did you know? You're the first person...
100%. They're going worldwide with this brand, and they will be successful worldwide. There's no doubt in my mind that Elf will be successful around the world. And what's interesting is, the company's just reached escape velocity now at this point in time. And there's no bringing it back. It's at escape velocity, and it's going to trade rich. It's going to trade rich for the next 10 years. It's going to trade at very high PE ratios, forward PE ratios for the next 5 to 10 years. The days of hoping to get Elf at a 20 forward PE it's not happening. It's going to trade rich because people are more and more understanding this brand's going worldwide. Their sales are just going to keep increasing in every market they compete in. And they're so low priced that they'll be able to raise their product price 50 cents here, $1 here, $2 here over the coming years and just keep taking those margins up as they want to take them up, right? And whenever they want to take them up. And so, I mean, it's just like, it's escape velocity. That's the only way I could put it. It's like a monster back in the day when I was investing in that, shoot, that's over a decade ago now at this point in time.
Taught me that TikTok could be huge. I thought it was an extraneous point. How did you know, and how explosive is that channel for you?
Well, our strategy is we want to live and follow where our community lives. And so we're always looking at what is engaging them, where are they spending their time? And particularly amongst Gen Z, we saw they're spending a lot of time on TikTok. So I think, we're now like a 4-time TikTok billionaire. Right. But we're not limited to TikTok. We also have our own channel on Twitch. This last quarter, we actually also did a branded experience for Roblox. That branded experience is the #1 branded experience on the platform, a 96% rating, over 5 million plays. And it also continues to help us broaden our audiences, including Gen Alpha. So we're really pleased with the strength we have across the various social channels, always being native and always looking to engage and entertain our community.
I want to thank you. I'm glad you mentioned your team, because I've met many of your team, and they
it's so weird even hearing like companies even trying to market to Gen Alpha, because my kids are Gen Alpha. And so to me, that's just like mind-blowing. That's just crazy, man. That's just wild.
Are ambassadors, and by the way, they're very happy that you came on our show. They remember when you were in the low teens, but they love you, and they love your brand, and they love the customers, most important of all. So I want to thank you for coming on the show. Look forward to watching your ad in real time on Sunday. That's Tarang Amin. He's the chairman and CEO of Elf Beauty, and I know this stock is headed to 200. Thanks for coming on.
Hey, stop taking my lines, Kramer. I said it's headed to 200. But yeah, so moral of the story in regards to Elf on a Shelf, they're at escape velocity. There's no putting the genie back in the bottle now at this point in time. They're going worldwide with this brand. Their marketing's, the best of the best. You're not going to beat them in marketing. You're not going to beat them in price point. You're not going to beat them really in quality for anywhere remotely close to that price point. And so for that reason, it's just a brand that is just, going to continue to expand for the next decade. And that's regardless of economies. That's regardless if there's bad. That's the thing with Elf's brand that makes them so special. And it's something I've been speaking about for 5+ years. It doesn't matter what happens. Shutdowns, no shutdowns. Bad economy, good economy. Low unemployment, high unemployment. It's all irrelevant. And actually, Elf can thrive. High inflation, low inflation. Elf can thrive in any of those environments. You throw high inflation out there, okay, people get tighter on money. Who are they going to gravitate toward? Elf. Okay, unemployment unemployment rate shoots higher. Okay, who's going to benefit from that? Elf. People don't have as much money, they're going to go to Elf, right? And even when people are in good times, still, they always want to look for good values. That's, great quality product. That's Elf. So it doesn't matter what happens. And there's very few companies that can say the economy is pretty much doesn't matter for us. We're going to be successful no matter what. Elf's one of those very few companies that can say that. Appreciate y'all joining me as always. Much love. Thanks so much for being here. I got massive moves coming up in the Patreon portfolio tomorrow. Pin comment down there to join so you get to see the moves each week. You see exactly how I build a portfolio. It's extremely valuable. Plus you get access to that Discord chat in there, okay? And you get to support my content as well. That's pin comment. Much love and have a great day.